5%. We haven't seen that since, what, 2008?
These are pre-crisis levels. 5% is a significant milestone for the recovery of the job market, and even more significant, just the magnitude of these job gains. 271,000 in the month. It's the best job creation, Poppy, all year now. A big surprise, and hiring across the board. So when you look at job gains, 271,000, the best we've seen since late last year. Look at that. That means now this year, on average, we're about 206,000 job gains a month this year. That means last year and this year are very strong years for job creations. Let's take a look at that 5% unemployment rate and where we've come from. You're so right to point that out. This is the unemployment rate since 2007. You can see it reached 10% in the depths of the recession and has been slowly recovering here, now 5%. Let's look at the sectors quickly. You've got a lot of hiring in healthcare. You know those can be jobs that span the income bracket. But business and professional services, very good job creation there. Those are accountants, insurance agents, lawyers. Those are technically office jobs in many cases that tend to pay a little bit more, Poppy.
What's interesting is that you do have a lot of politicians who will point out, look, these numbers are deceiving because, again, the unemployment rate doesn't count people who've given up and dropped out. But there's another critical number in here, underemployment.
Even the bad indicators have been getting better. Let me look at underemployment, and you've been hearing a lot on the campaign trail from Republicans about this. They call it the real unemployment rate. It's now 9.8%. It has fallen below 10%, again, since the first time since the recession. That number right there, Poppy, as you know, those are people who are out of work and people who are working part-time but would rather be working full-time. There's another number, the people who've been leaving the workforce, not even counted in these numbers, the labor force participation rate. That was steady this month. You've got people who are leaving the labor force because they're retiring. There are young people who are leaving the labor force, and we're not quite sure what all of the factors are around that. That number has been static. All of these other numbers, though, are showing strong hiring in the month. Strong hiring. It shows, I think, too, Poppy, that those global winds that were biting in August and September, in October, companies had to add workers, and so they did.
And so we'll see what the Fed does.
I think it looks now like it gives the Fed a little more people are thinking the Fed will raise interest rates in December, and that's something that will affect every single person watching
Everyone getting a mortgage, et cetera.
That's right.
Christine, thank you very much.